This is engulfing candle, and this is an engulfing candle. Today you will know who, what, and why the engulfing candle is so powerful, and how to use it to your strengths, taking you ahead from 99% of the traders out there. The engulfing candle is the only candle pattern you will need while trading. Well, maybe even this. An engulfing candle is just a candle that you can describe as swallowing of the whole previous candle, leading the graph to the opposite direction, such as this, or this. Now, why is this so relevant and all of these are not? Well, let me explain the science behind the pattern. A retail trader can't create such a candle. To create such a candle, you will need to call the big boys. When I say the big boys, I mean the banks, financial institutions, in other words, the big money. When the big boys enter the market, you see candles like these, signaling the direction of the market. And when you look to enter a trade, you look for such a momentum. You look for a confirmation, such as these two engulfing candles, which hint at the fact that the price won't go any lower than 219, and then the direction changes to the upside. Let's look at some examples. Now, we have Apple chart on the 5-minute time frame. You can clearly see that the chart has a resistance at 215-ish area. Price has touched that area multiple times and hadn't been able to break it. Later on, the price breaks and then retests the previous level of resistance and bounces, turning it to support. The confirmation of the bounce and the upward flow was the green engulfing candle. Here's another example of another stock I picked randomly. Ticker symbol RNA. At first, the stock is on a short uptrend in the 1-day time frame. Suddenly, when the price reaches the number 23.70, a first engulfing candle emerges. Then, price tries to go up again, then fails for a second time, with a clear second engulfing candle changing the trend, at least for the short term. Here's a trading strategy I would use alongside the engulfing candle. First, we will look for a range, where price will go from support to resistance, multiple times waiting for a break to either direction. Then, once we have a range, we will mark them. When I wait for a breakout, I am always aware of the chance of a fake break, where price will try and break the resistance to the upside, and once it breaks, then there's a large engulfing candle back to the range signaling it to go to the support area. This almost always helps me get some quick profit, even if I was wrong about the breakout itself. That is a specific strategy I used with the help of the engulfing candle. Let's look for a live example. First, to identify a range, then mark the support and resistance. Then eventually the price would want to break the range. And then one of two things will happen. Or the price will break legitimately and progress, or it will fake back to the other side of the range. When you catch a fake, you can ride it all the way to the other side of the range. Of course, this is a hand-picked situation and not all of the fakes happen so cleanly. But that is the perfect trade I would take using the engulfing candle in the range. If you enjoyed this video, or if you want to know more about monthly dividend stocks, go check out this video. Go check it out. I don't see you checking it out. Check it out. Go, please check it out. Hi, please. Go check it out. You might get really lucky and win my love for you for checking out my video. Check it out. Go on, check it out. Thank you for checking it out. Goodbye.